I hired a woman. Whoop, got it. I hired a woman who had been a bookkeeper for the town of Virgin, and she became the director of finance for the village of Virgin. And we've been working for about 10 years. Now, effectively, I work for her, and I ask her as many questions as she asks me. So we are really like a partnership. We've got about 7 people in our group, and we do everything from, we started with the town of Canandaigua, and we work with stuff as far east as, let's say, the Albany area, as far north as the St. Lawrence River, and as far south as right along the New York border.
Okay, so now we're officially into the 6 o'clock start time. I'm going to set you as host again, so you can pull up your PowerPoint.
Okay.
We already had some comments that you're fading in and out, like we discussed before. So Bob knows he has to talk right into his microphone.
I'm going to try and get it up. You might have to help. Let's see if you got my screen now. I got to figure out how to get that thing up there. Let me make that smaller and see if I can get the PowerPoint up there. There it is. Okay. This is a Southern Tier Central Region Planning Development Board. If I get this done right, you'll see me. Ah, there I am. That's got all my contact information for those of you that want to contact me. We can send out this document. What I wanted to do is let you know, as I started, we started EFPR Solutions. But the thing I wanted to say more than anything else, it's good for you to understand the difference between a CPA who does your audit and the person who looks at the financials. They look at it from a 5,000-foot level. The internal people need to look at it at the 500-foot level. And basically, it's like the difference between an architect and a contractor. So I found out that I am much more loved as a person doing the internal work than the auditor who the people didn't want to see. As I said, my contact information is on the slide. And references to documents. I've got about 4 other documents that we'll be looking at during the topic of this discussion. The topics are going to be reporting payments in lieu of taxes to start with, capital project planning, accounting, and reporting, and a glimpse at the 87 GASB 87 on leases. Now, you don't hear anything about ARPA there, but we'll get into those as we get into the capital projects. We'll provide a brief overview of the topics. We'll explain where the resources can be found for guidance when they're encountered, and hopefully we'll answer questions or identify topics where more information is desired. Now, what I've done on that for you is I will go into actually some of the documents which I've really gone through in detail and made my own notes on them. This slide itself is self-explanatory. Your questions will help me expand on the topic. Sections on pilots will be quite brief. My main focus will be discussing the capital funds and accounting resources related to ARPA or stimulus money. The section on a glimpse of the GASB 87 leases is included because it's new and could require reporting changes. And then, as I said, if time permits, we're going to get into the Treasury frequently asked questions. That gets to be quite an interesting area. I have a friend who I'm working with right now who's trying to build into getting answers on ARPA, and he says he's got a direct line to Senator Schumer because he's got a couple $100 million to work at. The additional slides we're going to be looking at are the local government management guide, which is on capital projects funds. That's a state controller's lease. We're going to look at the 1021 New York State OSC release from federal aid in response to various funding acts. And then if we've got time, we'll look at the coronavirus Treasury frequently asked questions and the NEO guide. So those are the topics that we're going to cover. Let's get into the pilots. The pilots is a fairly, and I'll make this fairly brief, but the Government Accounting Standards Board established a requirement for reporting pilots in 2016. Why did they establish it? Well, they wanted to allow lenders and others to determine the tax revenues that have been abated and commitments related to those abatements. That's the people like Standard & Poor's and Moody's. And who creates these pilots is probably most of you know. They're primarily industrial development agencies, county, and individual municipalities. Now, what information? Number one, you need the names and purposes of the tax abatement, the specific taxes being abated, the authority for entering, the criteria, the taxes being abated, any recapture provisions and commitments. Basically, it's the gross amounts by which taxes were reduced. Okay, so that's fundamentally what we're dealing with here. What I have in front of you is a worksheet that we've developed, and this is one of the things that we can send you if you want to look at them. It is a worksheet that basically tells you how we put together the work papers for our clients. And let me just walk you through it. Where do you get the information for the for the worksheet? The first year can take a little time to list the pilot. That information can be obtained from the governing agency that created it, usually the Industrial Development Agency, that have the information. I don't know how many of you have done that, but as we get into the discussion, you might be able to point that out to us. The current tax rate column is entered from your current year budget, which every one of you, I believe most of the people, based on what Victoria told me, probably work in that area. So you can calculate the full tax amount, taking the total assessed value. Now, the total assessed value can come from a number of places. It comes from the assessment roll, or frankly, we found it comes mostly from the bills that are sent out to the companies to show how they determine it. And basically what you do is you take a look at the cash receipts, you record it in the amount paid column, and because you've calculated the gross amount and it takes the amount you receive, the difference is the amount abated. That's the amount your auditors are going to be looking for, or you may want to put into your annual update documents for any notes that you have for your annual update document. So that's basically that worksheet. If you want a copy of that or something, we could send it out to you, no charge, obviously, and you can use this as a tool. You might find that the IDA might even have a decent information on that. So we keep a permanent copy of that, and we just carry it forward from year to year. The next thing, if I can move this down, I want to get into the capital projects. I'm having a little problem moving this down, Victoria. Hopefully you can help me because I'm going between screens. This gets kind of interesting. The New York State Controller's Office created a 50-page guide on capital projects. The guide is located at the following website. Now, you're not going to have to go to that website because what I've done is I basically created in a comment section.
Towards the screen, Bob?
Pardon me?
If you speak down towards the notes that you have, that's when your sound cuts out a lot.
I'm having trouble seeing the notes, so I'm trying to go back and forth, but I can do it because most of the stuff comes off my head anyhow. The capital projects, if it's not working, Victoria, let me know. The purpose of the capital fund is to account for the financial resources to be used for the acquisition, construction, or improvement of major capital assets other than those acquired through proprietary or fiduciary funds. Now, the reason this becomes much more important, and the reason I originally chose it for the presentation tonight, is a lot of the ARPA money is going to force you or result in you having capital projects, which most accountants and bookkeepers in smaller municipalities don't regularly work with. So you're going to find that you're going to have a situation where you might not be familiar with everything that you otherwise could have seen. Bear with me a second because I'm trying to go back and forth. It's a little more difficult than I'd planned. So never a dull moment in this life, right? I'm going from the screen that you see and the screen that I see are two different ones. So it gets kind of interesting here. The booklet that you're going to have in front of you will have the references to the capital assets, multi-year capital planning, and all those other topics that are there. The website where you can find that, if you haven't done this before, in our office, we go to this site time in and time out. It's the WWOSC State of New York Local Government Publications. When you get in there, there is a wealth of information. And if you haven't used it before, I highly recommend that you do use that information. Now, what I'm going to do is bring up the document that we're talking about here, the 50-page document. And the good news, it'll only be in one place, so it'll be a lot easier for me to talk to you about it. This is the state guide that you're talking about. It's a local government management guide for the Capital Projects Fund. If you can see the sheet, what I've done is I've bookmarked all the pages on it. So it'll be a lot easier if I send this out to you. They got the table of contents, and the table of contents shows you each one of the topics that I've bookmarked. And what we'll do is we'll cover each one of these, and we'll probably spend about 15 minutes going over these various topics. And you'll see that I have, if you get further on down, you'll see I have comments, and I've highlighted those in capital letters. The introduction is basically, and I've highlighted it for you, it basically says capital projects are used to account for resources. And frankly, what it is, it comes down to, it's going to be projects that are usually covering more than 1 year and for a large amount of money. And the local government is responsible for the oversight on it. Now, what you're going to do is you're going to find out that you're going to have typical situations, and how to account for them, it's a little different. One of the areas that I've used over my course of my career is using government employees and equipment in a capital project. The neat part about that is if you do use those people and you do charge that to the capital project, you eliminate it from your current costs. So it's a much better way of helping you even control your costs. And those people that would normally be charged through, let's say, your highway fund, are now charged to the particular capital project. I can recall one municipality where we received a $250,000 grant, and most of the work was done by the highway department. And basically had very little highway costs except for snow removal, because the municipality is up near Lake Ontario and we have a lot of snow. And we basically had one heck of a surplus as a result of it. Change orders are another issue that keep coming up, and we'll cover those a little later on. Accounting for the retained percentages. And by the way, believe it or not, at 5:03 tonight, I got an email from the New York State GFOA providing an updated guidance on retainages, and I'll cover that for you when we go through this. And then last for, and this is a real neat thing in this booklet, you'll see that they will tell you how to transfer money between the different funds. Now, once again, here are the management guides. So if you go to the New York State website and go to the local management guide, you can find every one of these, which will help you and your town boards or village trustees really do a good job. The cost savings ideas are tremendous. And the idea for having a multi-year capital planning is actually asked on your annual update document. They said, do you have a long range? Now, it's most of the small towns, probably 90% of your multi-year capital plan is your highway fund. And if you have a highway superintendent and he submits a list of their highway equipment, if you ask them, what do you need to buy in the next few years? You basically probably have got 80% of your multi-year capital plan done. It becomes pretty easy after that. Now, what is the purpose of a capital project fund? We touched on it a little earlier, but fundamentally, it's basically to take care of any large expenditure. Now, there's an exception to that. If you are having a large acquisition or a large purchase that'll be accomplished all in 1 year, you don't need to go to a capital fund. However, if you do have to finance it with a ban or a bond, then you do need to go through the capital fund. And if you don't do it through the capital fund, you're going to get a notice from the state controller's office or a call from the state controller office asking you why you didn't record the purchase in that particular year. That also will apply to leases, and that is why I'm including that as one of the points that we're going to discuss today. So that is the reason or the purpose for the capital fund. Now, here's the part that most of you that are accountants or bookkeepers are going to really like, because in this particular booklet, if you haven't, or brochure, if you haven't seen it, it basically talks about the accounting records. And if you'll see right here, they've got the actual accounts that you would be using, and they actually make recommendations. So this gives you that particular information. If you go down another page, they get even more detailed in telling you what you have to put in the W fund, which is a long-term debt fund, and what you have to put in the fixed asset fund, which is the K fund. So you get a lot of good detail right in this brochure, especially if you're that mechanic that has to do it. You're not the architect of all of these budgets and so forth. Now let's get into what the either the town or the village governing boards have to do. And what they do is make a point of it. It is imperative that local officials take the steps necessary to ensure that essential capital projects are identified and that funds are available to finance them. One of the problems we've run into over the years is we will see a motion in the board minutes that basically said, we're going to get a grant for $300,000, so we're going to build a new road, or whatever it is, and that's it. Well, there's more to it, because one of the things we will say to the bookkeeper and the board is, folks, we know how much you're getting, but how are you going to spend it? How are you going to budget? So you really need a long-range project budget for each of the particular programs that you have. So it's very important that the steps to follow that are here, and this is a good document to give them, the steps that are here would be good. Now, one of the comments that I made on it is down at the bottom. So here's my first comment. It's almost a requirement that a team of professionals be engaged if questions in this section are to be adequately answered. The outside professionals would include attorneys, fiscal advisors, and engineers. A knowledgeable internal accountant is probably available for large municipalities, but smaller municipalities could need help in setting up a budget for a project. This is often missed, and most CPA audit firms do not have the experience in such details. So I think it's important that you understand that you have to find somebody that really understands how to do long-range capital budgeting. So now what do you do with the long-range capital budgeting? You take a look at, unlike other governmental funds, they are required to have an annual budget. The budget for a capital project is project-oriented and is typically undertaken separately from the normal budget process. However, the board is responsible for providing proper budgetary control and overseeing the capital project's budgets. It's essential to use the budget modification to prevent the over-appropriation of it. And a lot of times we won't see it, to be honest with you. And by the way, this is 50 pages. You'll find I can get through it. I'm going to try and do it in 15 minutes. So by 6:30, hopefully we'll be done with it. Once again, they need to be compared to actual revenues. Now, one of the problems that we ran into, and I don't know if I covered it here a little later, but one of the problems that we run into is that we will get reports coming out from, and this comes under reporting and monitoring, so I'll go there right now. Once a capital has been established, the project has begun to fit, and or designee should monitor the project actively and regular, and they need to project. Here's my comment on it. Our experience is that engineering firms submit regular budget reports for smaller municipalities, but the records are generated from invoices and not entries into the accounting records, especially for early administrative costs. Best practices would be to coordinating the reporting by the accounting department and the engineers. So that is one of the big issues that we bump into. We're trying to wrap up one of the municipalities had a lot of major programs, and we're trying to figure out what monies are coming in and where. And without the coordination, it really does take quite a bit of time. Let's take a look at closing. Closing out a project is really, they need to assure that the money is going in the right place, and you need to transfer the money to the applicable operating fund or reserve. There's going to later comment on it, but an understanding of how residual funds can be used is important. The comment about transfer is relevant since most agreements restrict the use of unspent money to offsetting debt service. Budgeting the offset in future years is one of the considerations for long-term planning. I can still remember one municipality that we had that I think he had $100,000 in surplus. We put it into the debt service fund, and we started applying about $10,000 a year to level it off over the 5-year period. So you can either use it completely if you want in the first year, or you can spread it out over the term. So it's a tool that you can use to help on your annual budget if you know how to use where you're going to transfer the money. Now, we talked about what to do with municipal employees and the equipment a little earlier. And what I'm commenting here is using this for in-kind match can impact the current taxes. So once again, in a lot of grants, you're going to have in-kind, you're going to have a matching funds. The question, how are you going to match it? And that's one of the things that typically is overlooked or not considered when the budget is being put together. So it's important to understand how much of your local personnel can be used in doing these. And if you have a really good highway superintendent and an active highway department, I know in one town that I worked with for probably over 30 years, it was funny. The former highway superintendent could never balance his budget. And on retirement, we gave him a balanced budget, but unfortunately it was from another town. When the current highway superintendent or the highway superintendent to replace him was hired, we said, we want you to run it like a business. And it just so happened that the county was located in would farm out a lot of its work on road work or bridge work. And that a lot of the department's costs on that were offset by revenues that we got from the county or possibly the state. I don't know what it's like in the southern tier as a general rule, but that was a real good coup for this particular municipality that I'm talking about. One of the things that they talk about in the in-kind service, and you can see it down below, and this is how it impacts it. This entry records both revenue and expense and has no impact on the current budget. So what I'm talking about is you might record the expense, but you're going to have an offsetting income account that takes care of that. So that's one of the things that you want to take a look at. There are many funding sources require current funds or bans. Due from accounts are in play. One of the big issues that we run into in small municipalities is that if the money can't be transferred, and we find many of the local bookkeepers transfer the money between funds, we have the ability, and I think most of you have the ability, to reduce the number of bank accounts down to maybe 4 or 5 bank accounts rather than having one for every fund and one for every project. It makes life a heck of a lot easier. It cuts down on the time required for bank reconciliations, and I can't recommend highly enough to understand how you can do that, because you can spend an awful lot of time with bank reconciliations, or if you have a person that comes in that doesn't understand the transferring that is required, you can end up with a heck of a mess. We've gone in and had to clean up municipalities that hadn't filed an annual update document for 4 years. I'm working on one right now that's only 1.5 years behind, but that is not an unusual situation when you get into a capital project to have that occur. I'm gonna keep moving along here. I gotta watch my time. Change orders is another thing that comes into play. You just have to be careful. They must be presented to the board for approval for timely adjustment on it. When you get down to retainage, my comment here is in 2021, the New York State issued a release stating the retainage is not considered a liability, should be reported as an assigned, unappropriated, restricted, or committed fund balance. Here's the interesting thing. At 5:03 today, I got an email that basically says, yeah, that's true. You record the liability for the retainage in the W fund for a government fund, but you record the actual liability, including the retainage, if you have proprietary funds. Now, we have a number of municipalities, and we try our darndest not to put water or sewer funds in proprietary funds, because most town or village boards or village trustees do not understand it, and it just creates a heck of a problem. And if you don't know how to read a bill from a contractor, it can be up to 10% of the amount of money they bill you. So let's say you get a bill for $100,000, but they provided $110,000 worth of service. That $10,000, depending on where you are recording it, can be recorded in one of two places. By the way, you might want to take notes. I've been doing this for so long, sometimes I lose people because I get into so much into the weeds. Tina DeNegro, who I believe is on the session, when she and I first started, I used to drive her nuts because I'd get into the detail and she says, Bob, you got to slow down. Now I can't keep up with her hardly. So I will tell you, it has been, it's interesting because there are many times I get into a lot of the details that I've seen for over 50 years, and I forget that it might not be so normal for the rest of the folks that I'm working with. Let's take a look at the transfers. This is they talk here about transfers from capital reserves. And capital reserves are reported as restricted fund balances in fund financing reserve or in authorized capital project. This is an area that we find if we go in, and I've got a spreadsheet right now where they said, oh, we've got, I'll just say $500,000 in reserve. You know what? They never set up a legal reserve. New York State has issued a publication on reserve. It's imperative that you have an understanding of a specific reserve or a type reserve, since referendums are required and they're different for each one of them. And if you put the money in there, trying to get it out of there isn't easy. I had an engagement where a municipality had $5 million locked up in a water fund, and they had transferred it to the county and they didn't know how to get it out of it. We did a workaround, but you can have $5 million locked up in a fund and not get it out if you haven't properly had the referendums or all the other legal activities that are related to it. Now, here's the good news for the rest of you. And this is how we'll go through it a little faster. You can see they give you journal entries on all of these to tell you how to record them. The capital project debt as a guide is a reference for, as this guide is for accounting and reporting, capital local governments should consult with their municipal attorney for legal guidance related to debt issuance. I take a little bit of exception to. I like the attorneys, they do a good job, but frankly, the fiscal advisors are very good resources to come in and help you set up the debt service. Normally, bond anticipation notes are recorded as liabilities since they're short-term. Bonds, leases, and installment purchase contracts are recorded as income since they're long-term debt. In governmental accounting, it's really a strange relationship. And if you're not used to understanding how debt is recorded, you can really end up with a big mess on your books. Because once again, anything that is short-term goes in the funds. Anything that is long-term goes into the W fund. And that's where people get completely lost on this whole thing. Okay, so that's one of the other things. On the debt, on bans, once again, I got comments there. The state in its, and we'll talk about this briefly, in its release last July, I believe, extended the term for you can renew bans for 7 years. And there are different treatments for bans because most bans you renew on an annual basis, and they were supposed to be done within 1 year. But you can get a long-term ban and it can be done in a different way. So you just need to be aware of that situation. Now, with regard to installment purchase contracts, the new GASB releases on might relate this. Implement of this GASB has been delayed, but there are still some questions. And that's basically GASB 87 is where I'm talking about. They now consider a lease to be the equivalent of a let's call it a bond for lack of a better description. But basically, they have started to talk about installment purchase. And we find that many of the local municipalities just go to their local banks and get the loans. So they're operating in a different way. And we've run into one municipality that leases all of their highway and police vehicles. And the question, actually, I got an email today is, will that make a difference for us? You know what? I attended a seminar at the New York State GFOA and asked questions of the experts that they had, and they couldn't answer a lot of the questions. So this is a little bit of the Wild West trying to answer that. Now, what do you do with earnings on investments? For all intents and purposes, you can use them to pay down debt. And you can see that here. I'm not going to go into it because I want to get through this in the next couple of minutes. Bank accounts. My comment on those are one bank account is frequently used for multiple capital projects. However, there should be the capability to properly account for revenues and expenses for each project. And this is what my earlier comment was when I said to you, you know, we see a lot of smaller municipalities opening up a bank account for everything else because basically the law says you should. But then they get into the detail down here and they say, well, there are workarounds. So you should be aware of the workarounds related to those. Now, here's the important one for those of you when you're closing out a project. And the neat part, they tell you, if you get bonds or bans, you get to transfer any surplus to either a debt service fund or you make an interfund transfer back to the working fund. If you got multiple services, you got to figure out how to do it. So it's recorded as an interfund transfer. And once again, is the neat part is they give you journal entry after journal entry on how to do that. Then they get into, and we're running up on 6:30, so I just want to hit this real quickly. We've seen an awful lot of loans through the New York State Environmental Facilities Corporation. Very often there's a combination of loans and grants. The early disbursements are usually bans. It's important to determine the breakdown of the payments because if it's a breakdown between grants and loans, you might see the first 10 are grants, the next 10 are loans, and the next 15 are grants. So the disbursement authorizations show that detail. If not properly accounted for, the receipts that should be accounted for as loans, and you can see I can't spell, are accounted for as income. The rest of it is pretty straightforward. They talk about the different loans from EFC, how you account for them, and it's pretty straightforward, but you can see they give you working journal entry after journal entry, and they basically cover each of those topics. At the end, what you end up is they give you additional resources. Now, they don't have the sample capital projects, and I probably would need to get a hold of the state controller's office and say, okay, can you give me samples of these? And the way you do that is you go to any one of these locations and get a hold of them and ask them to help you. And I've found them extremely helpful in doing that. So that basically covers capital projects. And I'm going to try and close that out. And I hope I can close it out. Okay, help me out here, Victoria. I seem to be locked up.
Okay, I will make you host again for a minute.
It's one of the joys of, oh, here, wait a minute. Do you want to say, I found out the problem is, I just got to figure out here. I've got it. What happens, it showed up on another screen. That's what happens when you do these presentations. Now, what I want to do now is get into the GFOA guiding principles. This was primarily done for the money that's come from the feds. But this basically is a fundamental principle for capital projects. And I just want to read these to you because these principles to me are very important. I'm getting some feedback. Is there somebody else that's not on mute, Victoria? I'll go ahead. You need to be careful on the temporary nature of the ARPA funds. Care should be taken to avoid creating new programs or add-ons to existing programs that require an ongoing financial commitment. The funds must be used to cover operating, use of the funds to cover operating deficits caused by COVID should be considered temporary. An additional budget restraint may be necessary to achieve main structural balance in future budgets. And lastly, on this particular area, investment in critical infrastructure is particularly well suited for the use of ARPA funds because of non-recurring expenditure that can be targeted to strategically important long-term assets that provide benefits over many years. However, care should be taken to assess any ongoing operating costs may be associated with the project. Basically, if we get to the frequently asked questions, you're going to see water, sewer, and broadband. And we'll cover that on the next slide. basically partnering efforts. Local jurisdictions should be cognizant of the state level ARPA efforts, especially regarding infrastructure, and look at your regional initiatives. Basically, I think if you take a look at what your related organizations are doing, don't work in a silo is my recommendation. It's the best thing you can do as far as I'm concerned, because you will then have the opportunity to see how you can leverage it. And frankly, we see a lot of local municipalities will buy a vehicle with another municipality. So each one of them spends either a half or a quarter on something that they only use a half or quarter of the time. And I think probably most of you by now know what the eligible expenditures are. I'm not going to spend a lot of time on it, but one of the areas that I highlighted is replacing lost public sector revenue. And of course, you can look at what you have in the way of lost public sector revenue, not only for the government, but for some of the business areas. Because one of the provisions of these grants or loans from the federal government is that you can use it to help take care of the businesses in the form of loans or grants. But as I mentioned,
and do that whole section again, you were fading in and out.
Okay, basically I'm looking at the eligible expenditures. In one of the areas is replacing lost public sector revenue, which we'll talk about. But I also want to touch on the fact that you have small businesses in your area that might have suffered, that didn't have the wherewithal to get the money. You can use that money for loans or grants from it. And as I mentioned earlier, we're going to see, I think, most of the money spent on water, sewer, and broadband. The ineligible expenditures are basically highlighted here. I'm not going to spend any time on it. I assume that most of you have studied this already, and I think it might be redundant. But once again, the key point here is number 4. You may not be used as a non-federal match for other federal programs. And then, of course, you can't use it for rainy day or similar reserves. With regard to replacing lost public revenue, I'll cut short on this. And fundamentally, we have gone out as a service EFB provides at a low rate, and you can do it yourself. And we actually have a formula that I could send to you that I picked up the GFOA conference that said we didn't have as much revenue as we would have had otherwise. Frankly, the areas that we found where you would have had lost revenues would not have lost revenues. Most of the areas in the rural areas, we see that the sales tax revenues, which is usually a major revenue source, is still coming in. And if you have a recreation department or if you have justices, those typically lost money. The other area where we found that you've lost money is in the area of chips because the state come back on it. But those are the 3 fundamental areas. Unless you've got an area, it's not worth paying money to have it done, but if you think it's worthwhile. Now what I'd like to do is go to New York State and the links to resources. They've got releases that are in all of these places, and they are really dynamically links. So if you get a copy of this PowerPoint presentation, if you just copy these over, they will take you right to where you need to be. Now, the first release was just a basic release on July 20th. I'm not going to touch on it. It basically says it was signed into law. I just wanted you to know they existed. The one in August of 2020 was a basic one, once again, where they extended the bans from 5 years to 7 years and what you could use them for. And the last one is the one that I'm going to pull up for you, is the one that was issued on October 21st. And that was a 9-page, guidance that they, that I think you can see right now. And this was a 9-page document that basically tells you the federal government passed several laws. Once again, they tell you here that you need federal oversight, and they talk about, they provide sample journal entries. They talk about the different acts that are examples of non-recurring revenue stream because they want you to be careful. We talked about those in the GFOA guiding principally. And lastly, once again, fiscal oversight is not complete without communication. And once again, they tell you here in the New York State website, you can go to this. If you go to the New York State website itself, you click on that, you'll be automatically able to get to that. They then tell you about non-entitlement units, which virtually everyone on this session is a non-entitlement unit. By now, I assume you know what they are. If we have time, I'll talk about the supplement, and you'll see that a little later. If you have questions, they recommend that you go to the Treasury, and we'll talk about that a little bit later if we have time. And lastly, you can see they basically say we're coordinating with the Government Accounting Standards Board, GASB, in order to accomplish this. Now, once again, here's the beauty of these releases. And if you haven't been using them, they are really a tremendous resource. You can see that they have journal entries, and they basically tell you that local governments should initially recognize revenue received and the liability incurred in the general fund, and then they may transfer the money for these activities to the appropriate fund, and they tell you what accounts to use and how to do them. So that's the neat part about these releases, because once again, here are actual entries that you would need to make in order to make the transfers. When you get down to aid-related expenditures, they're basically telling you, you just continue to record the expenses in your normal accounts. The neat part here is, I don't know if many of you use this, but we go to the New York State online chart of accounts query. So if you just put online chart of accounts query for New York State, you can find out what they recommend. And then they have the old accounting and reporting manual. So all of this stuff is online and available to you if you learn how to use the New York State Controller's website. It's really a dynamite document. And then down here, once again, they give you the additional information on where to go. And once again, this frequently asked questions we're going to touch on. When I saw DOB resources, my first reaction was, what the heck is DOB? And then as I started to find the supplemental information or the budget information, how much each one of the municipalities get, it's the New York State Department of Budget. So instead of going to the New York State Controller's website to get that information, you'll have to go to the New York State Department of Budget to get that information. And that's basically what we have in that particular one. And I think I know how to get back to the scene. So we've talked about that release. Let's go to the next thing. Let's go to the New York U.S. Treasury frequently asked questions. Here again, as I try to give it to you, it's the easiest thing. If you got the PowerPoint, it will tell you where to go to find these questions. And I'm not going to touch on them other than say, here is the documents. The sections in the frequently asked questions, and if I bring it up, the reason I wanted to show it to you is they talk about eligibility, eligible uses, revenue loss, eligible general uses, premium pay, water and sewer. This is the one that stumped me. It says, see the frequently asked questions supplement. And basically I went to that one. I've got a copy of it if we need to look at it, or I can send it to you, or Victoria can send it. They talk again, once against the ineligible uses. And then if you're trying to calculate what you lost in the way of revenue, when you get to the next slide, it basically says, here's your revenue, here's the general revenue from your own source, and they tell you examples of what it is. So the information is tremendously available on what you have to do to determine what you have in the way of money and you don't have a way of money insofar as what you're losing. Let's take 2 or 3 minutes to talk about the GASB 87 on leases. And I'm pretty much going to read them to you, because leases before, if you went out and leased let's say a copier, we would just record that copier as you were making the payment as an expense. The Government Accounting Standards Board, in its infinite wisdom, has basically said they're going to treat any kind of a lease as a multi-year contract. So if you went out and leased a copier where you're paying $300 a month for the next 3 years, you got to record that as an asset, a liability, and then you have to record the payments. And the State Controller's Office is going to look for you to record that in the Capital Projects Fund on the original setup, and then record the expenses in a different way down the road. I'm not going to get into that because I probably have gotten into too much detail already. But the lessee accounting is payments made before plus the lease liability, and initial indirect costs are the value of your assets. Whoops, I didn't want to go there. I want to go back up. You have to figure out what happens if you got options. If their lease has an option, you have to use the useful life. If it's non-depreciable, you don't have to amortize. If you're a lessor It is basically the reverse account. Now, with a copier, it's easy, but we've got a municipality that has all of its highway vehicles, and we have a whole number of municipalities that have basically got a loader that they basically have bought. And the next year, the way it does it rolls over into a new loader, and they pay for the additional time on it. I'm still struggling with it, to be honest with you. And when I asked the expert, they weren't really able to help me either. What is the additional payment? How do you record it? What's the liability? And how do you record the new loader? Because every year they pay it down, but at the end of the 5th year, they've got a brand new loader, but they've paid the lease payments plus an additional charge for the use. We have another one where if with Enterprise, where if you have a piece of equipment and they estimated that the fair market value at the end of year 3 is going to be $5,000, and in fact it's $10,000, they will reduce your next lease. And the answer that cannot be answered, and so far the state controller's office hasn't really come after it, is are you meeting the requirements for bidding? Because fundamentally the leasing company has locked you into that particular lease, but they change it. And let's say you get this vehicle I mentioned. Now you've got a 2021 vehicle where effectively it'll go another 3 to 5 years. So that is one of the things that I'm struggling with. And once again, it's the wild, wild west where you're trying to learn how it really works. So what is the effective date? Well, fiscal years beginning after June 15 of 2021, but changes should be made retroactive to the earliest period. So fundamentally, we got fiscal years that started in June 15th of 21. So towns, you've basically got another year and a half, well, a year now, but the villages, you only got another, well, you actually got longer time. So this is a new document that's come into play that's made it very, very interesting. So basically, I'm going to just bring up one other thing on the frequently asked questions, because we won't have time to get into it. But fundamentally, what I've done is, if you look at, as of November 15th, they got frequently asked questions. And the reason I'm not going to get into it is that each one of you is going to have a specific question. So you're going to have a question is, what is my eligible use for water and sewer? So they're going to say, what type of water and sewers are eligible for the use of funds? And for non-entitlement units, they tell you what are your ineligible uses. So what I'm saying to you is, we can send out to you this particular document, and I think it'll give you a lot of answers to a lot of the questions you have. And rather than try to go through this and spend the 48 questions and not give you folks any time, we're at about 6:47 right now. I'd rather try to answer the questions, or if I can't answer them, make a list of the questions so I can send out answers to each of you. So Victoria, with that, that pretty much wraps up what I have to say. I'll leave it up to you on how you want to handle the questions. If you want to open up the unmute the rest of the people. It's always neat to have a 10 to 15 minute discussion about questions that are on their mind, and we can make notes of them and respond to those. I can't hear you. You're muted. That would help to have you unmute, Victoria.
Yes, if people want to start putting their ideas in the chat box, they can, or if they use the raise hand feature, then they can unmute. I can unmute them. So does anybody have any specific questions?
One of the questions I have is, did I get into too much detail? It'll be a little bit review of how did we do. And I'm sure you sent out a survey, but I'd like to understand if we got into too much detail or we didn't get into enough detail. So maybe people could comment on that.
Well, I'm not seeing a rush to ask questions. So do you want to just pull open the Q&A and go through a couple of the ones that you thought were most notable?
And that's what I had. I see Tina Negro as one of the persons that listen. Tina, you might want to unmute yourself and help me out on some of these questions, because you've been living through a lot of the capital projects and some of the more complex ones. let me bring up the questions. Oh, here's the NEU, by the way. Let me just throw this out for you. The NEU, the supplement that they were talking about is an 8-page document. I found that it wasn't really as detailed as I thought it would be. It basically helps get you an idea of what the NEUs are going to be. Go ahead. Somebody got a question?
They wanted to know if the PowerPoints would be available, and I said I will send them out to all the attendees tomorrow.
Yeah, not only should you send out the PowerPoint, I would suggest we send out all the other 4 attachments, because at least they don't have to go in to find them, but they'll also have the ability to go and find them. And that was really the goal I had here, is to give them the websites where they could find that information and have it available to them.
And the documents that we have your highlights in them. Right?
Yes, and that's what I did. Is I spent a lot of time either with my comments or my highlights, so that they get the feeling of those of us that have really been in the, let's call it in the weeds, just like them, because we actually function as the internal accountant or bookkeeper for about, Tina, was it about 20, 24 towns and villages? We're actually do the internal accounting. Fundamentally, Tina is the director of finance, if you will, or the budget director for a large village, and that's one of her functions. And she also, we also get the work ready for the auditors. One of the areas that might come up if you have to have a single audit, and I didn't touch on that, is we are now creating fixed asset records for many of the municipalities. Most small municipalities do not have good fixed asset records. And in my history, I created the fixed asset records for the town of Greece, which is one of the largest towns in New York State, and for Genesee County. So I've been down that path, and we just did one for a very, very large village that's got a very large water and utility department. I've made presentations to the New York State GFOA on accounting for fixed assets. I was cheered by the small municipalities, and I was booed by the large ones, because one of the areas that I touched on is how do you account for roads? And at the end, I said, really, who really cares about fixed asset accounting? But it's required for the auditors and for single audits. And frankly, most auditors don't know how to handle things like roads that were built in the 1990s, and how they handle the new capital improvements on them. So it's a real, once again, it's like everything else I mentioned, like the Wild West, and auditors will typically approve it if you've got some kind of decent records on them.
Well, we have 2 questions from the audience. Can you, 3 messages from the audience. Could you take a few minutes to discuss capital leases and entries, again, a little slower? Another question is the replacement of HVAC air handling equipment on town halls, fire departments, and highway facilities. Is that pandemic resistant okay? And then the final question we have on the list is, will internet upgrades, laptops for municipal boards, going to be acceptable uses of ARPA funds in order to be prepared for virtual meetings during another emergency situation? So which one of those do you think you'd like to answer first?
Now, let me answer the last one first. You got to go to the ask the questions, because they really get into the detail. Now, here's the interesting thing that I said. Please listen to this very carefully. Know who your elected or state federal officials are. It'd be Chuck Schumer, Senator Gillibrand, and pardon me for being political, but I've got to be. If right now your congressperson is a Democrat, and I think it's Tom Reed down that way, he's a Republican, they probably don't have a lot of leverage. But if it changes over to Republican House, or now you've got a different ballgame. So the ability to get money through the ARPA funds, or the interpretation of what's eligible and not eligible, those people can be very, very good guides in assisting you. So I would strongly urge everybody to get to know their federal senators, and I would urge them to get to know your congressman once you get past the time. I think if your congressman down in your area is Tom Reed, I don't know how much he will be able to help you. I hate to be political, but I'm also a pragmatist. With regard to the leases, fundamentally, I think if we go back to, I'm going to try and see if I've got that on my presentation. I don't know if they've got it here. You know what I'll have to do? I will get I know that there's something in one of the documents that I've got on lease accounting. If people do want that, there is a PowerPoint presentation on lease accounting that basically tells you what the debits and credits are. I'm gonna
We can't hear you because you're looking away from the screen.
Sorry. What I will do is I will get that PowerPoint to you that you can send out to the people. I know there is information that gives you the accounts that should be charged. So once again, you don't have to implement it right now. And one of the biggest things I think that we all need to try and find out is what are the legal requirements for bidding? Because if you want to go out and because of the highway vehicles, if you want to go get a highway vehicle for $250,000 and you want to lease it because they can't do the repairs and maintenance in-house anymore, are you meeting the bidding requirements? And then you have to figure out how to record it. But fundamentally, the first year, I'll just tell you basically what you have to do. Well, it goes back to here. Let's see if I can find it on here. Let me go back up here. Payments made before plus the lease liability and the initial indirect costs. So if you buy the piece of equipment, and you'll have to, I may not be perfect on this, but if you buy the piece of equipment, you record the first payment and the liability in the capital projects fund or the H projects fund. The subsequent payments can then be made out of the operating fund. So if it's a, let's say it's a highway truck, the payments on that lease would be paid out of the operating fund. And now I have to think of where and Tina, if you can help me out on this, I don't know if you can or not. The payment would be possibly a proceeds from a bond payment. And a credit that's just a basic bookkeeping entry. So I would rather send it to you in writing rather than not be accurate in my comment. But I know that it's going to be in the capital project fund in the first year. In subsequent years, it's going to be in the operating fund and probably in the W fund for the long-term portion of it. So it's going to be a combination of how it's going to have to be recorded. And you really need to see it in writing because you're not going to remember it if I do it just orally. What was the second question that I missed, Victoria?
The first question
Sure, I can get up the chat. I can go in the chat right now.
Will
the internet upgrades, laptops, and municipal boards going to acceptable uses? Once again, I would go to the questions. There is no specific answer to that. Is replacement of HVAC air handling equipment on town halls, fire department, and high facilities that is pandemic resistant? Okay. Once again, it's a borderline question. I think you have to go to the frequently asked questions because when I went through it, they're saying, you know, what is it? One of the things I cautioned you on, in this case, it looks like it would not be repetitive, but it seems to me if you want to say, once again, is it part of it? And that is going to question that you're going to either have in those frequently asked questions or from your elected officials. I hate to sound it, but that's basically what you're in. I prepared one of the first Medicare reports prepared in the United States back in the 60s, believe it or not. And it was the same situation. It's the wild, wild west. There's no clear answer. You have to make sure you line it up with whoever is going to approve it ahead of time. And that'd be the US Treasury with the help of your elected official.
In this case, does it help to have any notes from your municipal meeting that says, because, you know, kind of a whereas, wherefore, but in your notes section saying, we view this equipment as important to the health and safety of the people who visit the building, because this is the new standard for coronavirus, therefore we're going to spend the money in the appropriate way.
And once again, you know, it's a discussion that you, number one, look at the frequently asked questions, and number two, double check with the Treasury to see what they're going to say. I could go back through the 48 questions, but most of them are on water and sewer. So I'd have to look at those particular questions. And, you know, we got 48 questions or 48 pages. So I'm not going to sit here and try and say one thing, because then you're going to sue me in today's world, you know? So
No, I was just going to thank you very much for preparing this presentation and spending time with us this evening.
What again, we're available. My phone number and my email are on the presentation. Whoops, I went too far. I'm more than happy. I enjoy helping people. And Tina would tell you if she listened, she said, you're a pain in the neck, Bob, because you keep helping people and we can't afford to have you keep helping them at the rate you're helping them. So it's my role in life today. I truly enjoy it.
Okay, thank you so very much. And yes, the presentation is going to be sent to all the attendees tomorrow. And then I guess I'll have to keep a record of anybody who watches it on YouTube, and then they can send it to us. Send their names if they've finished watching this video, because we're probably going to upload it to STC's account. And then you can email me and you'll get a copy of the materials as well. So there it is. Thank you all for attending. I look forward to hearing from you in future if you have additional class suggestions. So just email me if you have thoughts, and I will try and put together more classes for 2022, which is rapidly approaching. Thanks so much.
Bye-bye.
Bye-bye.